MarketStrategy.com.
Hello again, it's Chris looking at the upcoming Friday, September 5th trading session. In front of you I have the economic calendar as per usual. Not a lot to look at though for this day because it's Non-Farm Payroll Friday. It's the only thing that will truly matter. There will be a little bit of reaction maybe to the German industrial production numbers, but really below there is where we're looking at employment change in Canada. Now that will have an effect on the Canadian dollar marketplace, and then non-farm payrolls, which is anticipated to come out at 225,000 added for last month. With that being the case, it's going to be a very technical day, but let's look at a couple charts and see if we can find some potential trading opportunities. Okay, the first chart, and probably the one everybody's talking about today, is the euro. It just fell off of a cliff. Pretty interesting, really, considering we've been falling since May, really. So the fact that we drove down even farther shows that we could be getting a little bit of a washout here. The ECB, of course, did a surprise rate cut, and that is murder to a currency. So that's not a big surprise. We are below 130. We think rallies will continue to offer selling opportunities, and the real support, in our opinion, is down at 128. So this could be a nice little move here. Once things calm down, a little bit of a bounce, selling opportunity, just go back and forth with it, in our opinion. The dollar CAD is a market that we'll be watching with both economies releasing their employment figures for the previous month today. You can see that we have resistance here at 110. That's been fighting the market for some time, but we are bouncing off of an uptrend line. So good US numbers will send us looking for 110. The question is can we get above it? I don't think so during the session unless it's an absolute blowout number. Probably a nice short-term buying opportunity about to happen. If we break down below this trend line, that's a different story, but I'd need to see a daily close below there to be comfortable shorting. Looking at the DAX, you can see that we initially fell, but announcement of the ECB rate cut and the stock market went higher as already negative yields in Germany in the bond market went even worse. So that being the case, the market looks now like it's going to use 9,600 as a floor and maybe 9,800 as a target. Short-term pullbacks should continue to offer buying opportunities on quick binaries, in our opinion. Really no interest in selling the DAX, and ultimately I believe we get back to the 10,000 level. And then finally, looking at the oil markets, light sweet crude initially had formed a bit of a hammer, but less than anticipated drawdown in inventories, of course, is negative for the potential supply and demand. Really, the biggest problem we're going to have is that the US dollar continues to strengthen, so it's going to weigh on this market, even though there are plenty of geopolitical tensions out there that could cause a spike. At the end of the day, we will probably remain range bound, but be aware of the fact that the better the jobs number, the more upward pressure we'll see in this market. And with that, I've taken a look at the Friday non-farm payroll trading session.